the last video we went through, we prepared the bank reconciliation. So we looked at all of these items that have been recorded in the books, but not yet in the bank. So those are on the bank side. And then we also reconciled the items that went through the bank statement, but were not recorded in the books. So those went on the book side of the bank rec. But doing this reconciliation actually is only the first step that is necessary. Once you're done that, you also need to journalize transactions from the bank rec. So the bank rec, we do this in order to determine why these differences exist and explain them. So look at why the bank balance in the actual bank account is different than what we have on the books. But when you do the bank rec, it's not automatically linked to the books. So you're just, let's say, doing this on a piece of paper, but it's not adjusting anything in your T accounts. We're just figuring out why these differences exist. Because of that, because it's not automatically done, we actually need to record journal entries to adjust for the items that are not yet recorded in the books or that were recorded wrong. So anything that was on the bank side of our bank reconciliation, remember this has already been recorded in the accounting records. It just hasn't hit the bank statement yet. So there's no entries that need to be done for this side. But for the books side of the bank rec, these were all of the items that went through the bank account. So we saw them on the bank statement, but they're not yet recorded in the accounting records. But we want them to be recorded in the accounting records. So we're going to do journal entries for all of these items to make sure that our T account for the bank is up to date, so our cash account. So we go in and we record for the items that are not yet recorded in the books, but only the book side. And once these entries are posted, when we look at the T account for cash, it should agree with the reconciled cash balance per the books in the bank rec. So we'd post those journal entries and our T account would end up agreeing to this reconciled book balance that we had on the bank rec. Okay, so if we go through and look at the journal entries that would be required for our example that we just went through, these are the journal entries. So you guys will have this bank rec in front of you. So flip to the books side. And unfortunately, I'm not going to just keep flipping back and forth. So you look at this while we're looking through the entries. So the first item we're going to have a journal entry for is the EFT receipt for rent. So we got paid rent revenue. It got collected by the bank, or was an EFT receipt, I should say. So it went into our bank account, but nothing's been recorded. So to book that, we need to debit cash because that amount went into our bank account, and we're crediting rent revenue. We earned this, they paid us for it, and therefore we need to recognize the revenue. So that would be the journal entry for that first item, which was number 4. Number 5 said that there was a bank collection of a note receivable for $2,114, which included interest revenue of $114. So again, that went into our bank. We added it on the books side. So we're adding it into cash by debiting it. And $2,000 worth of that paid off the note receivable. So we credit the note receivable for that amount. But it also told us $114 was interest revenue that we had on the note. So we'll credit interest revenue for that amount. The next reconciling item that we saw on the books side was that there was interest earned on the bank balance. So because we have that balance in our bank account, they paid us interest. we added it on the book side. So again, we're debiting cash for the 2801, and it was interest that we were earning, so we'll credit interest revenue. So in all of these entries, you're just looking at what happened. Why did we get that cash into our bank, or why did it come out? And you record always the cash side, and then you're recording why you got that in these cases. The next reconciling item, number 7, was a book error. So the check number 333 for $150 paid to Brown Corp on account, it was recorded as $510. So the actual check that was written and cleared the bank was $150, but when we did the entry, we recorded $510. So the entry that would have been recorded in error when we booked it was to debit accounts payable for $510 and credit cash for $510. But it should have been $150. So to correct that error, we need to now debit cash, so put that difference back into the bank, and also credit accounts payable. Because in our original entry, we took out too much. We took out $510, so now we're putting this $360 back into this accounts payable for Brown Corp. Number 8 said that there were bank service charges of $39.25. So now, if I look back quickly here, we've moved to the items that were getting subtracted on the books portion. So now when we subtract here, it means cash out. So we're going to credit cash in our journal entries. So number 7, we're crediting cash because the bank took this money out and it was a bank charge expense. So we'll debit bank charges expense for that. Or you could say bank service charge expense, something like that for that account name. The 9th reconciling item was an NSF check from L. Ross. So when we would have recorded that payment from L. Ross, he was paying us on account. So now when the money comes out of our account, we need to credit cash because it came out, and we need to set up accounts receivable for L. Ross. Because since that payment that he gave us, that check, didn't actually go through, we now need to go back to him and say, hey, you still owe us this money. So we still need to receive it, and therefore we put that into accounts receivable so that we know to collect that from him or her in the future. So NSF checks, you will always debit accounts receivable and credit cash. Because you've done the work, you've earned the revenue, but you need to put it back into the receivable account so you know that that still needs to be collected. And then the last item was an EFT payment to insurance expense. So cash came out, we credit cash, and it was insurance expense, so we will debit the expense for that amount. So as I said, you're just looking through the reconciling items that hit the books side of your bank rec, figuring out either why did the money come in or why did it go out, and recording the entry accordingly. Okay, so that is the last step. Now once we do this and we posted these to our T account, we would be left with the ending balance that we saw, that reconciled book balance. So that example that we went through just listed the reconciling items, but it's possible you could see different entries. So these are the key steps that you go through. This is kind of a summary or a slide you can look back on so you don't forget anything. So the first thing that you do in a bank rec is figure out what is the closing balance on the bank statement and what is it in the cash account. So you'd either just be told this in the question like we were, or you may actually be given a little picture of a bank statement and a picture of a T account. So you need to figure out what are the closing balances in each of those. Then the second thing that you would look at, which we didn't in our first example because it wasn't part of it, but you would look back at the bank reconciliation from the prior month. So you would see what reconciling items were on the bank side and look if they've now cleared the bank in this following month. So for our bank reconciliation here, if we're looking at the bank side, let's say, for example, we'll look at these outstanding checks. So this was at January. When we go to do the bank rec at the end of February, we would look back to this reconciliation and we would need to check each of these items and see if they cleared the bank account in February. If they did, great. Now they're no longer a reconciling item. But if they didn't, we would need to now include them on the February bank rec as well. So if the items have still not cleared the bank, you include them on the new bank reconciliation under that bank side. So you've always got to check back to the previous month and see if it's either gone into or come out of the bank statement yet. Third, you compare the bank statement and the book details. So this is an example where you would actually be given a bank statement and the GL account or the T account for the month. So you need to look at each item that was recorded in both and cross out the items that are on both sides, because that means it's been recorded in the books and in the bank. So if it's in both sides, we don't need to reconcile it. So you'd go through, cross out the amounts that are matched. Then you figure out what's left on both sides. So on the bank side of the bank rec, you're going to account for any leftover items that are on the book cash account. Because on the bank rec side, we're recording or we're reconciling for any items not recorded through the bank yet, but that have been recorded through the books. So if it's on the book side and not crossed out, that means it hasn't gone through the bank, so we reconcile for it there. Then we look at any items that are left over on the bank statement. So they went through the bank statement, but if they haven't been crossed out, it means they're not recorded in the books yet. So we would put them on the book side of the bank rec. As well, you would look for any bank errors or book errors. From these first 5 steps, we then prepare the bank rec. And then step 6 is to make those journal entries for the reconciling items on the book side. So items that cleared the bank but have not been recorded in the books yet. Okay, so now it's time to practice. Below the video, I will post a couple of questions that you can try. Try them on your own, and then you can look at the solution videos to go through those.